Hi, I'm Paul with Harford Financial Group. With all the stock market volatility, will my investments go to zero? There are three words to think about: possibility, probability, and diversification. Most anything is possible, but what's the probability of a particular event happening? Yes, the sun could burn out, or the earth could be hit by an asteroid. Both scenarios are possible, but not highly probable. Will the state of California actually fall into the sea? It's possible, but not very probable. Heck, it's even possible I could be signed as a pitcher for the Baltimore Orioles, but not very probable. Now, if a person's investment plan is exclusively focused on just one company's stock, then there's a higher probability that your investments could go to zero. Think of companies like Bethlehem Steel, MCI, Lehman Brothers, just to name a few. In those instances, the investments went to zero. But because we use highly diversified portfolios, one's investment risk is typically spread across hundreds, if not thousands, of different securities, meaning diversification. We listen to our grandmother's advice by not putting all of our eggs in one basket. Throughout history, stock markets rise and fall. Stock market declines are temporary, while stock market advances are permanent. A typical benchmark that an investor hears in the news is either the Dow Jones Industrial Average, also known as the Dow, or the Standard & Poor's 500, known as the S&P 500. The Dow is made up of 30 stocks with such names as Apple, Home Depot, and McDonald's. The S&P 500 contains 500 of the largest capitalized companies with such players as Microsoft, Amazon, Facebook, and Johnson & Johnson. So for these two U.S. stock benchmarks to fall to zero, all these companies would need to go bankrupt on the same day and have no liquidation value. Sure, it's possible, but not very probable. Jokingly, if 500 stocks within the S&P 500 did fall to zero value, then we might as well get ourselves a mule, plow, and seeds and start all over again. Finally, markets react to a variety of news events, both economic and geopolitical. Occasionally, our economy will enter into a recession, but even when that happens, the economy still exhibits a base level of consumption. McDonald's will still sell Happy Meals, Johnson & Johnson will still sell diapers, and Amazon will still sell books, and Home Depot will still sell lumber, tools, and nails. Yes, the volume of sales may temporarily fall, but there is still a base level of consumption that will happen across our country and the world, though maybe at a slower pace. So remember these three words: possibility, probability, and diversification. Please call your investment advisor with any questions or concerns. Thank you.